This is Digital Perspectives with Brad Kimes. Subscribe for new content notifications. Now, here's Brad Kimes. Come on in.
Welcome back, everybody. I'm Brad Kimes. You can follow me on Twitter at BackupBradley above at the top of the screen, and everything that we're talking about here, the old system collapsing. And I think we're going to look at some information next. In fact, I know we're going to look at some information today that suggests that there is a heavy narrative from the high-level positions in government and finance that are discussing exactly that, and we're going to discuss it too. Okay, before we do, the Ripple Labs IPO watch from SEC site, nothing today, but just letting you know we're on it. We'll let you know. Okay, so before we get into this, let's do the numbers really quickly. We're going to move through this information very quickly today. Lot to cover, and I want to get it all in a timely manner for all of you. Everything brought to you today by I Trust Capital on Calling the Numbers. If you want a crypto IRA or a gold IRA, go see I Trust Capital. They're incredible. I got a link in the description box for all of you. Okay, here we go. Bitcoin is $8,847.73. Ethereum, $413.40 on this day. XRP is 29 cents. Let's take a look on the numbers here. 0.2934 currently right now for XRP. The 24-hour volume has dropped a little to 2.6 billion on the 24-hour. And the total circulating supply, which recently came up from 44,918,000,000, is now at 44,942,000,000 plus. Those are your numbers. All right. Let's get into this. Guys, there have been so many scams out here, and it's happening everywhere to everyone. YouTube does not have a conscience. I learned that a long time ago when they suspended my channel for absolutely no reason, twice. So you must be careful. I have to be careful. You guys have to. We all have to be careful. The ads you're seeing with giveaways that are being stuffed around every single YouTuber, I don't care what coin they're covering, if they're in the crypto space and finance, you must be careful no matter what it is. And that's in YouTube and anywhere in life, your email and all of that, which is why I want to remind you that 940,000 XRP, Coinbase lost over 940,000 XRP to YouTube scammers, says Explorer founder. So, and here we see 1.5 million plus XRP stolen by scam artists on YouTube. So the number is extremely high, no matter who you go with. That's why I tell everybody, get several layers of protection for yourself online. One of them is the Pure VPN. It's not a joke. The market is only getting bigger. The crypto space is getting huge. They're now on mainstream media with Grayscale and soon to be many, many others. It is going to be a very, very well-known investment area for a lot of people, much bigger than it has been for all of us retail speculators that have been in this market for a while. It takes several different layers to protect yourself online. Pure VPN is one of them. Make sure you take a second to check that out. There's a link in the description. 7-day trial for 99 cents. Make sure you protect your anonymity online. All right, let's get into this. All right, the system is collapsing. And we're talking about the system of the global reserve currency, the US dollar. Oh, Brad, how can you say that? That is quite a statement. Now, look, I'm not saying the dollar's going to go away. It's not going to go away. But what is in question is the dollar as a reserve currency and how to deal with that. Now, that's not just something. Look, we've talked about this a lot on this channel here, but this is not just us talking about it on YouTube or my podcast. What this really is a conversation happening with the IMF, the OMFIF, which is the official Monetary Financial Institutions Forum, which is a collection of many different founders or members and central bank board members. Central banks board members to discuss ways of better using blockchain in the CBDC rollout. And this is just the beginning of the conversation today, because it goes across many different areas, and you're about to see that. Why would we be having this conversation? Well, look at the chart of the US dollar currency index. Yeah, currently falling like a manhole cover from the sky. It's a mess. and the implication of that against other countries and their currencies, if they're pegged to that, to the U.S. dollar, or if they're just simply using the U.S. dollar through trade. Yesterday, I covered a webinar. Shout out to Charlie Mayo for sending that to me. And this was a very, very deep discussion about dominant currencies and the limit of exchange rate flexibility. Basically discussing the notion of dominant currencies like the US dollar as the global reserve currency, and talking about how you adjust the exchange rate for that against the other currencies of the world that are getting crushed in one form or another, whether it's because they are pegged or whether it's due to a trade issue or a lending factor. So this was an incredibly deep discussion that went on, and I'm going to play for you just one little segment here from Barry Eichengreen, who was also a guest on Blockstars with David Schwartz on the Ripple podcast. So let me play this couple-minute little exchange here, remarks that he makes, where he talks. Don't listen to me when I say it, but you better start listening to people like Barry when he starts talking about the dollar dominance issue and the Triffin dilemma. Listen to this exchange.
Thank you, Samaya. I think the paper and the report are a tour de force and profoundly depressing. They're a tour de force in the sense that they contain theory and sophisticated empirical work, but also the new data set that Gita spoke of that a lot of us will be anxious to get our hands on. But the conclusion, to my mind, is depressing because it implies that monetary policy is less effective than we have traditionally thought. In a world where sterilized intervention doesn't do much, monetary policy and exchange rate movements go together. When you're at the zero lower bound, monetary policy works even more heavily by moving the exchange rate because it can't move the interest rate. And if it really is the case that you get less stimulus to exports and less oomph from monetary policy generally, I think it's incumbent on all of us to think about what to do instead. So is this project an argument for fiscal policy? That's depressing because fiscal policy is heavily politicized. Fiscal policy works with even longer lags typically than monetary policy. What do we need to do in terms of reforming our fiscal institutions if we're going to have to rely on them more heavily? And the second part of the question would be, what do we have to do to get out of this position of dollar dominance? Because it has the undesirable effect of weakening monetary policy, and it will run up sooner or later against the 21st century Triffin dilemma problem.
Well, there you have it. Now, we've talked about this a lot on this channel. This is Barry Eichengreen, who, as I said, was just recently a guest on Blockstars with David Schwartz, now speaking in the IMF panel about fiscal policy being too much of a long-term lagging indicator, not indicator, but a lagging effect to stimulate things that need to happen. And what are the effects of making an exchange rate, an external shock of an exchange rate change to something like the US dollar? The back is against the wall for the US dollar and the other countries of the world. I think as we move through this material, it's important to not lose sight of the fact of what other countries are going through as well. Like I said, keep in mind, other countries peg their dollar to the US dollar. And then there's other instances where country A and country B are trading goods between each other, but using US dollars to do so, which means there's a conversion on country A side and then a conversion to the local currency back on country B side, and using USD in between. And there is an issue there because there's an extra set of transactions that are happening within that trade process that the US is not even involved in. None of this resembles a level playing field. And it points, and he so wonderfully pointed out at the end of his talk here, what he said, his comments, that we're nearing the Triffin dilemma for the US dollar, which the Triffin dilemma, by the way, is when you have a global reserve currency that when they make decisions that are best for the national policy, it usually affects negatively the global international policy in the other countries of the world, and vice versa. When you make decisions that are best internationally for the global reserve status of a dollar, then that usually affects negatively at home. They don't usually work in tandem to serve one another. Triffin dilemma. Okay, let's keep this moving because it doesn't stop there. If you haven't seen the full coverage and breakdown of that webinar yesterday, this is the video right here, Ripple XRP IMF. You can find it in my video playlist. Please go watch it. It was an incredible webinar. Okay, here the Office of Comptroller of Currency has been evaluating the cryptocurrency space for years, even well before it announced banks could provide services. Banks that are now interested in branching out into crypto should reach out to their local US OCC. Now, this just tells you how long this has been a conversation and a study and in the works. This is not something that Brian Brooks, now the head of the OCC, did by shooting from the hip. This has been in the making for several years. So, okay, then that brings us to yesterday. Brian Brooks on mainstream media with Julia Chatterley. Let's take a listen to some of these comments here.
Two currencies, digital assets for safety.
And first of all, allow banks to hold cryptocurrency assets. Big deal.
It perhaps should come as no surprise, as he's the former chief legal officer of Coinbase Global, the biggest U.S. exchange for cryptocurrencies. Brian Brooks, the acting U.S. comptroller of the currency, joins us now. Brian, fantastic to have you with us. I'm really excited to have you on. You sort of have a 21st century view of what the banking sector should look like. And
sure
I said it's raising a few eyebrows. It's raising a few more. Give me a sense of what your vision is.
Well, Julia, thanks so much for having me. And these are really important questions to ask in a time like this. You know, this is a time when Americans are depending on their banking system more than they ever have before. When we made a decision collectively in this country to shut down the economy very broadly back in March, we depended on the banks to deliver benefit payments in the form of paycheck protection program loans and checks sent from the Treasury Department. And the problem is we were sending those across 19th century banking rails. Many people said that it took days or sometimes weeks to receive their payments. And my vision is that we need to get to a place in this country where payments can be transmitted virtually instantaneously, where errors can be eliminated. And it turns out technology exists today that can help us do that. So we need to get there, I think, sooner rather than later.
You've talked about a new payments charter. What does that mean? And what is the technology that we have today that exists that circumvents, to your point, the 19th century rails that the train has been running on so far?
Well, it's really interesting, Julia. If you look at the payments business over the last 30 years, there was a time when all payments happened through the banking system. And in the last 10 or 15 years, with the rise of fintech, largely dominated by a bunch of Silicon Valley firms, it turns out that technologies exist, whether they're based on blockchain or other kinds of networks, that allow payments to go much faster. And as a result of that, what's happened in this country is that millions and millions of daily payments no longer are principally processed by banks. They're run by companies like PayPal and Stripe and Square. The question for the payments charter is, do we think it's a good thing or a bad thing that all of that activity is now happening outside the banking system, where the examiners who work in my agency can look at them and make sure that there's fraud being prevented and make sure consumers are protected? Or do we think it would be better for them to run entirely outside of regulation? I think the best solution, which you see in other parts of the world, including the UK today, is to have faster payments that are innovated by private companies but are supervised by federal watchdogs like us. That I think is what the future looks like.
I mean, the pushback that you're getting here is from existing banks, whether at the state level or those that are federally regulated. I mean, they have existing businesses, I guess, to protect. The problem is they don't best serve the customer.
Well, that's the thing, Julia. And if you look at what the reason is why so much payments activity has moved outside of the banking system, part of it is because consumers want to receive their services in a different way. I mean, let's face it, there was a time when we all used to buy our clothes in department stores where we could also get our oil changed and have lunch. The world changed on the high street shopping market, right? Now we all go to boutique stores. We buy our computers at Apple, our jeans at the Levi's store, et cetera. Banks are sort of the last bastion of the amalgamated comprehensive supermarket, if you will, of financial services. But that's not the way consumers shop anymore. The other thing that's really important is markets look at these companies very, very differently. So it turns out the return on equity for startup tech companies is far higher than the return on equities for banks, which is what creates strong market incentives for these services to move into specialty platforms and outside of comprehensive banks. All of which means that if we don't rethink what the bank charter is and find a way for the bank charter to be broad enough to encompass services that were historically provided by banks, we're going to have a problem.
SWIFT. Some people will recognize this term, others won't, but it's the way right now that the system works and the information, the money is passed between banks, and the last thing it is SWIFT. It's clunky, it's slow. Those outside of the industry, particularly in the fintech sector, know there are better options. Brian, is this the plan to replace, improve on the existing infrastructure that SWIFT is at this moment?
I want to remind you before he makes this comment that this is the head of the Office of Comptroller of Currency, the head of the entire national banking system.
Well, Julia, you make a great point that SWIFT is one of the most ironically named organizations in the world. The joke in my world is that if you wanted to move money from America to Australia, the fastest way to do that is to load it in a suitcase and put it on an airplane, which is a little bit crazy in the US, right? So to me, what has to happen is there are faster solutions, and they exist in other parts of the world. So the UK, Singapore, China, many of our global competitors have adopted real-time payments. In the US, that seems to be still years away unless we allow existing technologies to do the work for us. And I think that's very possible.
Unless we allow existing technologies to do the work for us. And this is a key statement, as many others, using the same analogy that Brad Garlinghouse has used many, many times about flying the money across to get it to where it needs to go. And talking about using the existing tech that exists out here to get this job done right away. And that's the public-private relationship. And I truly believe that he is talking about things like Ripple and XRP in this conversation without having to say the words, because we all know there isn't one other entity on this earth that has done the work to be recognized within the financial and the banking system across the planet the way Ripple has. The long game, I believe, is about to pay off. Let's keep this thing moving here. Okay, so R3 operates at the center of a growing ecosystem, 350 of the world's leading institutions applying blockchain technology to unlock the value in global trade. 60% of the world's blockchain applications for trade finance are built on R3 Corda platform. By the way, the Corda platform also offers the Corda settler as a settlement option, which uses the digital asset XRP. So want to keep that in mind as well. And again, going back to the IMF discussion that I pointed out and covered yesterday, is that this conversation about the dollar weakness and dollar dominance and the dollar falling in its strength right now, and how it hurts and infringes against other nations and their currencies. It comes down to many different areas. It's not just the exchange in the FX market. It's not just the peg between trade. It's all of these different things, lending as well. There's so many different areas where the dollar dominance is an issue, and the fact that it's falling over the last couple of years is an issue as well. All right, so it just heightens the issue. So here we see Goldman Sachs FX executive leaves to Ripple. This is interesting. Welcoming him, and I don't want to mess his name up, so congratulations to him. He has resigned from Goldman Sachs FX executive to join Ripple. Spent 7+ years at Goldman Sachs, beginning as an FX analyst in India in 2013 before moving to London in 2015, where he rose in the ranks investment bank to become executive director, global FX and emerging markets franchise management for Goldman. Before joining Goldman Sachs in 2010, he had worked the flow traders at HSBC in Singapore. Ripple is leading provider of enterprise blockchain solution for payments. Ripple claim it is the only enterprise blockchain company today with product in commercial use. Ripple's global payments network includes over 300 customers across 40 countries and 6 continents. Congratulations to him and all his endeavors where he goes to Ripple and the things that he will accomplish there. Now, the thing I find interesting about this is because he worked at FX desk where they exchange currencies. It's the currency exchange market, right? Now, here we have Emi Yoshikawa, and shout out to her. Had briefly met her very quickly at the last swell last year. A very, very nice person. And she reminds us here the various types of crypto assets. But I think the role of XRP as a bridge asset in international settlement is not a competition with stablecoin or CBDC, but on the contrary, complementary. We believe the various stablecoins and CBDCs will create a synergy by responding to liquidity problems by bridging independent crypto assets, XRP. You seeing a narrative here? We are positioned to serve this role. We're in the pole position to serve this role, to be this bridge asset. Now, to close this out, I want to show you this. This is a 2-minute clip from back in November of last year from Chris Larsen. All 2 minutes of this back up every single piece of information that we've just gone over. Here we go.
How do blockchain and digital assets help build out the Internet of Value?
It's two things at the same time, right? It's an infrastructure for moving value around the world, and that's both the distributed ledgers as well as the interoperability layer, ILP, for example. So that's really analogous to the way the internet works with the internet protocol. The second part of it is digital assets, which of course are impossible unless you have a blockchain. Those currencies are going to be extremely important for reducing liquidity costs and sort of just greasing the wheels of how all these other things of value, dollar, yen, RMB, euro, always going to, in my opinion, going to be the dominant currencies in the world, but they need a digital asset to enable that easy translation from one thing of value to another thing of value. So we think they supplement the global economy in key ways.
Now that's interesting because, this is the same exact discussion on the other end, talking about digital assets, and as a bridge asset, XRP can serve as a global supplement to trade, which is exactly the discussion that was going on here at the IMF yesterday. Let's listen to the rest of this.
Innovation that you've described from blockchain and digital assets, what kind of regulatory clarity do we need to get there?
Well, I think you hit right on it. The key thing is regulatory clarity. And
he just stressed regulatory clarity. Clarity. Not more regulation. Clarity. What would clarity be? I don't know. With the recent acquire of Goldman Sachs FX executive to control Ripple building out its market for the commercial use of XRP for settlement, I guess that clarity to me starts to look a lot like XRP. The clarity it needs is a currency designation. How could you exchange all the currencies of the world to solve the dollar dominance issue that the IMF discussed yesterday if XRP was getting hit with capital gains taxes? How do you have a bridge asset sit in between all the world's transactions of the FX market and trade and get hit with capital gains? Where's the benefit to use it at that level? There isn't one, not that I can see. But if it's a currency, just as the currencies that are being exchanged in the FX market, which this gentleman from Goldman Sachs is now at Ripple there to help to build and continue to develop, then there isn't a cap gains issue because it'll be a currency as a bridge asset just like the other currencies that are being exchanged, whether it's trade or the FX market. That's my 2 cents on it. All right. So, and in that, I think we see a situation, just as Chris Larsen says at the end of this Ripple drop, about how we need the Treasury, the Fed, and FinCEN to be a part of this, which is where the systemically important financial market utilities come into play. And I believe that we could see something like XRP, the ledger, the ILP, and these things, and RippleNet as cloud-based technology become designated by the Treasury, whether it be FSOC or FINCEN or some other body connected to it, or the OCC. All of these are regulatory bodies connected to the Treasury, by the way. And that should be your biggest giveaway right there. Who's doing all of this talking? Brian Brooks. Well, what's Brian Brooks connected to? The commodities division? No. Brian Brooks is connected to the banking division and the Treasury. He's the head of the U.S. banking system, which deals with currencies. All right, guys, that's my food for thought for the morning here. I hope you guys have a wonderful day. Hit the like and subscribe. Make sure you share this content with somebody you know. Check out all the links in the description box and find a deal that's right for you, and make sure you help yourself solve anything that you need there. And I will catch all of you on the next one. Take care.